Hello everyone, this is Alejandro Cremades, and today we're going to be talking about the questions that entrepreneurs should ask investors. So the fundraising journey is tough. It's going to be full of obstacles, full of those hurdles in order to really get to the money, to get that money wired into your bank account. The investor is going to ask you questions during those tough meetings, but you also should be in a position to ask questions, not only because it's going to say a lot about you and about perhaps the research and the homework that you've done ahead of that meeting, but then also because it's going to give you a better understanding as to how you can approach the fundraising journey better and how you can optimize as well for time so that you can get that money quicker. So with that being said, let's get into it. What percentage of your meetings lead to term sheets? So this is a very good question because essentially what you're going to understand, or you're going to get a better access into the funnel of that venture capital or that angel investor or whichever investor type of profile that you're dealing with. That way you know what are your possibilities, perhaps leading from that meeting into a potential check. So again, a good way to get great insights into how they're thinking about making investments and into what their process actually looks like. Next is what percentage of term sheets actually lead into checks. So here what you want to know is once they've already given that promise to actually make an investment in a business, the last thing that you want is that the term sheet gets pulled or whatever thing happens that they're not giving you the money and you don't get that check and you don't get the money into your bank account. So you want to understand if that's a high number, you want to understand them or ask them why is that the case. And that would help you understand if it's good for you to continue investing time with them or to perhaps, shift gears and go and spend time with somebody else where you can have like a better access or better visibility to really reach that money. How often are we going to be meeting after the investment? This is a great question because it's going to give you an understanding of what are the level of expectations that they have in terms of like meetings that could come in the form of informal meetings or board meetings. But essentially, you don't want to get involved with someone that is going to be labor intensive because your duty is not to be reporting to the investors 24/7, but more than that to actually execute on your business so that you can deliver results and returns to those investors that are investing in your business. How often do you lead rounds? This is a great question because really you want, especially at the beginning, you want to separate the ones that lead from the ones that are just followers. Because in many cases, investors are like sheep. They go where everyone else is going. You want to really shoot and optimize for the ones that are leading, that are not going to care about what everyone else has to say or do, and that if they like what you're doing, essentially they're coming in and they're going to make an investment and price your deal or your opportunity so that everyone else comes in and also invest under those same terms. So again, it's always about optimizing for time, and you're going to get the best return on your time when you're going for people that are going to be in a position to give you that money right away without wondering what everyone else is doing. How many follow-on or follow-up investments have you made? I think that this is great in terms of a question for two different reasons. On one end, you're going to gain a better visibility as to how involved and engaged they are with companies after they have made an investment. So that's going to give you an understanding of, maybe you can expect another investment from them, maybe not. But then the other thing is that if you get an investment specifically from a venture capital firm and they're not reinvesting, that ultimately is sending a negative signal to the market because other investors are going to think, hold on, they have a venture capital firm, they're not investing, there has to be something wrong with the business. So that's something that could be catastrophic for you. And that's why you want to make sure that you have people that are coming in, that are aligned with your vision, with your mission, and that they would reinvest if things are executed the way that it should. What could we improve on the pitch? This is a great question because at the end of the day, those investors, they want to invest in entrepreneurs that listen. they are investing in you, and then they're investing because they want to help you in building your business. So by you asking them this question, that really comes to show that you listen, that you want to improve, that you want to do better, and that's going to not only get a great impression from them about you, but then also they're gonna perhaps, again, remember, those are people that are meeting with your competitors, with also they've made a decision and they've also surveyed and researched your market. So they're gonna give you great insights as to how you can repackage or reposition certain things of your pitch to make it even more exciting. So that's a good question that can come in two shape or forms of really positive stuff that you can get in terms of an answer. What's your timeline? Again, you want to ask this question because it's going to give you an understanding as to what to expect in terms of like when they may make that investment. You're not gonna be waiting forever. You need that money now. And for that reason, you wanna understand whether they have the money to deploy now. And if they have the money to deploy now, how long it actually takes them to deploy such money. The last thing that you want is to really optimize or to invest time with people that don't have the money or people that take a long time because of whatever bureaucracy that they have in terms of their process. So be very careful with those timelines. Who would you put on our board? That's a really interesting question because it's not about the firm that is investing in your company, it's about who is the partner that is going to be representing that company in terms of their portfolio companies that have received an investment from them. And that's essentially if it's a venture capital firm. Now, obviously, if it's another investor that is an individual, then you want to make sure that it's people that you get along with and then people that can bring something to the table, either because they understand the space, the segment, maybe they've done it in the past. So really you want actively involved investors that can bring their networks to really help in pushing things to the next level, because at a board level, you're gonna be again discussing strategy, you're gonna be discussing problems and potential solutions. So you want people that have been there and have done that before. What do you expect from this investment to do for your portfolio? This is another good one because you wanna understand what are the expectations, what kind of multiples they're looking for in terms of a potential exit, and you also want to understand if that's going to align with the way that you're seeing things, because the last thing that you want here is to have someone that puts a tremendous amount of pressure in your business, a tremendous amount of pressure on the execution, and you cannot afford to have that. What's the first thing you would want us to do after closing? This is a question that is going to lead you to understand what exactly is going to be like potential next steps. And here, what you don't want is to keep them waiting. So once you get the understanding and the answer, then make sure that you have that already in place to give it to them. Here, once you have received the term sheet, which is the promise to make an investment in your company, you are going to go through the due diligence process, which essentially is verifying each and every single one of the claims that you've made about your business, whether that is having interviews with you and your team, interviewing some of your customers or perhaps partners. So that's going to take time. So you need to understand what that process is going to look for them, what are going to be those expectations, and then also for you to prepare towards that due diligence process. Who else needs to approve this investment? Especially when you're dealing with corporate investors like the corporate venture arm of a larger corporation, they're going to have all types of committees that are internally established to approve or reject certain investments that are going to be considered. So you need to understand what are going to be the parties that are going to be involved in order to get your investment to go forward. And that way you're gonna know, perhaps certain things where you can help that investor that is sponsoring your deal. This could also be asked to venture capital firms and then also to private equity firms. Obviously, for angel investors and individuals, it doesn't matter because it's just going to be them. How much do you typically invest? So this is an interesting question because it's going to help you understand whether if that investor comes in what's going to be that potential amount, and if you may require other people to also invest to fill the rest of the round. So it gives you kind of like a lay on the land as to what could be that round and who would be needed in order to get it to a close. How much do you reserve for follow-on rounds? Essentially here you need to understand what's that typical amount of money, how much would they potentially invest in your business down the line, and even perhaps, like how much have they already invested of their current fund so that you're not wasting your time with people that don't have dry powder to invest in your business. Would you mind introducing me to a founder of a portfolio company in your, let's say, a venture fund or maybe like even you as an investor individual that has failed? You want this investor to introduce you to an entrepreneur that they have invested in that has failed, and talk to that entrepreneur. Because when you're discussing with that entrepreneur, you're going to see how they behaved during the tough times. Because during the good times, everything is great, everyone loves each other. But during the tough times, when you're on the other side of the mountain, you're going to understand whether they rolled up their sleeves, whether they treated them as a write-off and they left them to die. So you want to know if during the tough times, they went at it with the entrepreneur to really be helpful and to do whatever it took to turn things around. Otherwise, it's if they leave you just to death, like a write-off, then no one else is going to be investing in you and it's going to be a complete mess. So you want to know that people are ready to jump behind the trenches with you to push things forward. So let me know on the comment section below what else you typically ask investors when you're meeting with them. Also make sure that you like the video and subscribe to the channel so that you don't miss out on all the videos that we're rolling out every week. And take a look at the fundraising training, which is the program where we help from A to Z with everything related to fundraising. There you'll find live Q&As, templates, agreements, a community of founders helping each other all over the world. And I think that you would find tremendous value in it. Thank you so much for watching.